Are prices in Dubai falling, or is that just what they want you to believe? I'm currently seeing a number of properties where developers are suddenly offering discounts, and that is creating uncertainty among investors. At the same time, we have geopolitical tensions in the region that many people are reading completely wrong right now. So the question is, are we heading into a real correction, or is this the best time to enter the market in years? Today, I will show you clearly what is really behind these price movements and what you need to pay attention to right now before you make any wrong decisions. Welcome. My name is Eugene Simbelman from Dubai Finance. I help investors successfully invest in real estate in Dubai by finding the right property as an investor, Dubai Land Department certified property valuer and mortgage specialist. So let's look directly at the market, because something I get asked about a lot right now is, why are developers suddenly giving discounts? Why are payment plans getting better? And why does it feel like the market is starting to turn? Many people don't realize that what we are seeing right now is not a coincidence. It is the logical result of a market that has been moving in only one direction for years, upward. But today, the off-plan market is under pressure. And that's not just a feeling. It's a development that has been built for over a year and has picked up speed in recent weeks. For years, this segment, the sale of unfinished properties in Dubai, was a goldmine for developers. Net margins of 40 or 50% after all costs in the billions. Hardly any business model in Dubai was as profitable as selling off-plan properties for agents, but also for developers. But what happens in a market where one side has made enormous amounts of money for years and the other side has mostly been buying on hope? Did you know that an off-plan property by nature generates no returns? Many people completely ignore this point. You buy a property today that doesn't even exist yet. You knowingly give up rental income, which is the actual foundation of any real estate investment. And instead you will bet on someone buying the property from you at a higher price in the future. That is not a classic investment. That is an assumption. And as long as prices keep rising, this system works. But the moment that growth slows down or reverse, this model breaks down. And that is exactly what we are seeing right now. Something many people don't understand. These patterns have always existed. The market was never as tight as it was made to look. There were these so-called pre-launch phases, supposedly exclusive access, supposedly units that sell out immediately. But once you look behind the curtain, you quickly realize that in most cases this is a stacked shortage, a show, a sales mechanism. Many people genuinely believe entire buildings sold out within days. The reality is different. There are almost always units left over, for weeks, sometimes even months. And these leftovers, so-called remaining stock, are then marketed differently weeks after the actual sales launch, once the developer's impressive launch event has faded. Presented as apparent bargains and one-time opportunities. Suddenly someone knows someone at the developer. Another top client who decided to pull out and wants to pass on their chance. Suddenly there's a unit they can offer you exclusively, but only today, only now. That time pressure is not a coincidence. It is part of the carefully designed sales system behind off-plan and agent marketing. But what happens when that pressure no longer works? That's when the next phase begins. Payment plans get adjusted. Many developers offer what are called payment plans, often presented as attractive investment-free in financing, where you first had to pay 80% during construction and 20% on completion. Then it became 60-40, then 50-50. And today we see developers going even further. Many people think this is a benefit, but in reality it is a clear signal. The market needs more incentives to find buyers. And now comes the key point that many people completely underestimate. We are not just seeing better payment plans. For the first time, we are also seeing real price reductions directly from developers. Not on the website, not officially communicated, but as soon as you negotiate, as soon as you go deeper, you notice the prices are no longer fixed. And that is a break with a system that only knew one direction for years. Something many people ask me is this a bargain now? Is this the chance to get in at a low price? And this is exactly where most investors make the biggest mistake. They see a discount and automatically think they are getting a good deal. But the discount on an overpriced property does not automatically make it a good investment. So you need to understand where these discounts come from. Developers have this room to move because their margins are extremely high. If you have 30, 40 or 50% margin, you can easily give around and still be profitable. But that doesn't mean you are getting a good entry point. It just means you are paying slightly less than too much. And that is exactly why looking at the off-plan market right now is so important. Because while developers are starting to adjust their prices, there is a second development happening at the same time. One that is far more interesting and that almost nobody talks about openly. And this development is what determines whether you are making money or losing money right now. Because while many people are still looking at developers and wondering whether a 5 or 10% discount is a good deal, something completely different is happening in the background. Did you know that there are currently a large number of investors who are being forced to sell their off-plan properties below their own purchase price? And I don't mean 2 or 3 individual cases. I mean a structural pattern. People who bought 1 or 2 years ago, often with big promises and expectations of quickly reselling, are now realizing that this is no longer possible. Reselling is often only allowed once a certain payment threshold has been reached, frequently 40 to 50%. At the same time, these buyers are under pressure because they still have to keep paying installments on a property that generates no income. And this is where a tension builds that many underestimate. On one side, developers who want to keep selling, on the other side, investors who want out. But could these actually be the best entry opportunities? Stay with me, because it seems so logical. Don't buy from the developer, not in the showroom or at the launch party, but from those who need to sell. If someone is forced to sell, who has the better negotiation position, and should you use that to your advantage? More on that in just a moment. And this is exactly where the difference lies between an apparent bargain and a real opportunity. The developer might give you 10% off a price they set themselves. The seller, who is under pressure, on the other hand, might be selling 20 or 30% below what they originally paid. Not because they want to, but because they have to. Because they need cash, because they need out of the contract. Otherwise, they risk losing everything. But even these heavily pressured sellers rarely find a buyer for their property. Something many people completely underestimate is the pressure that developers put on their own buyers. A payment plan are not optional. If installments are not paid, the response comes extremely fast. Warning, threats. Sometimes within just a few weeks, there are hints of contract cancellations and possible losses. And this hits people who have invested several $100,000 in some cases. On top of that, developers in the same project are still pushing unsold units into the market with better payment plans, price reductions, and their biggest lever of all, high commissions paid to agents who primarily sell off-plan properties. Because reselling an off-plan property only earns an agent around 2% commission, while developers often pay 5, 7, or even 10%. And on top of that, there are additional bonuses, one-time payments, and sometimes even cars as gifts when certain sales targets are hit. So when a developer cuts prices by 10%, makes the payment plan more attractive, and pays 3 to 5 times higher agent commissions, the original off-plan speculator trying to sell at 20% discount is at a serious disadvantage. And that is exactly why these so-called off-plan bargains find almost no buyers. And if this breakdown helps you and you want to understand how the market in Dubai really works, then make sure you subscribe to my YouTube channel, Dubai Finance. I regularly cover exactly these kinds of developments, showing you real transactions, real numbers, and most importantly, the mistakes many investors are making right now without even realizing it. And in the coming days, I will be sharing a deep market analysis on the current state of the real estate market and the off-plan segment especially, with real numbers and real deals. And now we come to the point that matters most for you. What does all of this mean for your decision? Should you buy now or should you wait? My position here is very clear. I'm fundamentally against off-plan properties, regardless of the developer. It's not about project A or project B. It's about the systems behind it. You give up returns, you take on risk, you depend on future buyers, and on a market you cannot control. But that does not mean there are no opportunities right now. Quite the opposite. Opportunities are being created right now, just not where most people are looking. Off-plan is not really interested at all. But the real opportunities are highly motivated seller in the existing market, in the secondary market, with rental years from day one and the possibility of getting this sale or this buy mortgage, so you can leverage your equity. They are real existing properties, real transactions, and not marketing prices. And this is also exactly the biggest mistake I see again and again. Many investors go on platforms looking at listings and think they have a clear picture of the real estate market in Dubai. But that is only the surface. The truly good deals are not publicly advertised. They come from data, from networks, from direct discussions. And this is exactly the approach we take at Dubai Finance. We don't just look at listings. We analyze real transactions. We evaluate properties based on data. We go into buildings, check the quality on the ground, and then put the price in perspective. Not emotionally, not based on marketing, just based on facts. Because in the end, it's not about buying just any property. It's about making the right decision. And you don't make that decision by chasing a discount. You make it by truly understanding how this market works. If you want to put exactly that into practice, if you don't want to fall for the warned signals and instead want access to the deals that are genuinely interesting right now, then go now to www.dubai-finance.com and book your free initial consultation. We will look at your situation in detail, analyze together which strategy makes sense for you, and show you exactly what opportunities you have in this market right now.